Avalara proudly sponsors this podcast series about accountants by accountants and featuring some of the best thought leaders in the industry. Thank you to our sponsor, Avalara. Avalara's award-winning tax automation solutions help accounting practitioners and businesses of all sizes simplify sales tax compliance with real-time rates, automated returns filing, and more. Learn more at avalara.com. Hey everyone, this is Lorilyn, and you're listening to the Good, the Bad, and the Ugly Accounting Podcast. More accountants than ever are experimenting and shaping our profession in new and interesting ways. On this show, I sit down with these rock stars to discuss the ideas, the opportunities, the struggles, and the strategies that they're taking advantage of so the rest of us can do the same. Accountants can earn free CPE credit from listening to this podcast. Just download the Earmark CPE app in the App Store or visit earmarkcpe.com. Hello, everyone. Welcome to another episode of the Good, the Bad, and the Ugly Accounting Podcast. I am your host, Lorilyn Wilson, and I am so excited for today's episode. So a year ago, when Blake Oliver reached out to me and asked me to host a podcast and asked me to brainstorm certain topics, what I might want to discuss, this was the topic I was most excited about. So it's almost been a year before I got the right guest on the show to do this. And I don't want Marvel to sue us, but I'm going to call this the 0 to 30K MRR multiverse of madness is what it is. And so the premise of this episode is, what would you do, or how could you scale a firm 0 to 30K MRR in the fastest, quickest, most efficient way possible? And to help us do that is Kane Polakoff. And I got it right. I crushed that, right?
Congratulations.
And Kane is retired for 1 week. He literally is he just switched firms. So he's starting at Resnick. I said that right too.
That's correct.
Which is a top 12 firm. But before that, you were at UHY.
That's correct. Yeah, I was at UHY for about 3.5 years.
And they were very large too, though. How big were they?
Yeah. So they're a top 29 firm, and Cohen's the top 12.
Mm-hmm. And you led their client. I always get all the A's confused. Is it the Client Advisory and Accounting Services? Is that how they use that acronym? Accounting Advisory Services.
So we call it Client Accounting Advisory Services, which is CAAS. Some people call it Client Accounting Services or Client Advisory Services. Mm-hmm. So all three is very similar. We can talk a little bit about the differences as we kind of continue our conversation.
Yeah, I actually saw there was a Twitter thread where it was an article maybe put out by the AICP. It was one of the big accounting publications that it was like accountants cannot come to an agreement on what that acronym actually is or should be. Like everyone describes it slightly differently. So in your new job, are you doing the same work, or is it a similar role, or how's it same? How's it different?
Yeah, so at UHY, I was brought in to start the CAAS practice. So I was employee number one. So 3.5 years ago, there was no technology, there was no process, and there were no people besides myself. So I was in a little corner and had my laptop and started from scratch. And we can talk more about that in a little bit. At Resnick, there is a foundation of work, but looking to kind of take what we have and build the foundation upon it to take it to the next level. So, looking at it from evaluating the type of people we have, how do we enhance the processes, and how do we leverage, wonderful technology to be able to deliver, great service to our clients. So I'm kind of doing the same thing, but the great thing now for me is I have that framework, I have that blueprint, and I've gone through the good, the bad, and the ugly.
Yes.
With UHY, and hopefully most of Resnick will be the good.
Yes, yeah. Instead of going from 0 to 1, you're going 1 to 2. So you have a good foundation to build from. I also was peeping at your LinkedIn and noticed you're the member of a lot of strategic councils. The CPA.com, Intuit, Bill.com, BotKeeper. Am I missing any? Are there other ones?
There's others, but I can't talk about it.
All right. So which one out of all of them, which one's your favorite one to be a part of?
So it's a great question. I think, everyone is a little bit different. I'll answer it that way. So we have like CPA.com. We're helping to define what's becoming CAAS 2.0. So right now we're focusing, you hear the word terminology CAAS 1.0, and how do we kind of move to the next level to provide the next service? So it's great. We meet with a bunch of CAAS leaders and thought leaders around the industry, and we kind of help define what the future will be. So I think that I've been doing that over a year now. That's been fantastic, and helping to kind of listen, because it's still a beginning. We're at an evolution of what CAAS is going to become. It's been around for about 10 years, but the last 3 to 4 years, we've seen just a huge growth in demand. But then when you look at, BotKeeper and Intuit and some of the others I'm part of, you get more into the technology and how is the technology solving some of the issues. So it's fun to it helps me get pretty insightful of what's happening in the industry. And then ITA, which I'm a board member, we're helping to collaborate with a small group of top 100 firms and helping to define and collaborate and discuss some of the challenges we have within the industry and how do we solve them. So it's fun to be active in all those different associations.
Yeah, definitely. It seems like with the CPA.com versus the other two, you're kind of on both sides of the coin, which is
Yeah,
neat.
no, definitely. Yeah, it's been great to be able to do all of it.
Yes. Okay, so tell us a little bit about your background before you started at UHY building that CAAS program. Like, how did you get the tools and the expertise to even be able to step into that role?
Yeah, so I was fortunate coming out of my undergrad business degree to work for Accenture, and the great thing about working for a large consulting company is that in a very early age, you're taught about how to leverage technology, how to improve processes, and how to work with clients. So, the first part of my career is really the focusing was really on the Fortune 100 companies and how to come in there and how to make them more efficient. And that was in the late 90s. And then with Y2K and everything, I was fortunate then to get into what we call business process outsourcing. And that was for more Fortune 100 companies too, where we were looking to high transaction volumes and how to take these manual paper-based processes and digitize and create, technology solutions that can enable process to become more efficient. And then at that point in time, back in early 2000s with Y2K, with India and offshoring too, I got a taste of that and to be able to work in countries such as China, India, and the Philippines and other parts, and how to put that all together and support our clients. So over the years, I've kind of moved more down from the Fortune 100 to more of the small SMB market. And I've always enjoyed kind of how do you put everything together, how to build something, from the ground up. I've had experience in my past having to start new lines of business, which we call more of an entrepreneur. So kind of building a new line of business within an existing organization, and small organizations, large organizations, different type of technology. And then I kind of moved into running, being heavily involved in BPO. And then I got the opportunity, very luckily, to start at UHY, where everybody was talking about CAAS and outsourcing and offshoring. And I was able to meet the right individuals at UHY. They were ready to do it. I mean, CPA.com and everybody were talking about the growth and the expectations. You look at accounting today and a lot of other surveys, it's the fastest growing line of business within the public accounting world today. And started back in July of 2019, and the rest is history.
So when you were at UHY, were you pretty much given free reign? They're like, you do whatever you want to do, or were there layers of bureaucracy you had to deal with? Because I know at a large company that can happen.
And so I was very fortunate that the first day that I started, that I was put in an office, and it was really a blank sheet of paper. So there was no predefined expectations of what technology to use, how to build it, what process to use, and the executives in the firm were very supportive in those efforts. So they really deferred to myself, and as we hired others to kind of take on that journey, and they're there to support us, but there wasn't. Hey, you need to look at these 20 technology platforms, or you need to hire these many people. It was really, put together a business plan. We'll talk about it, and then we'll execute it as we move forward.
So what made you make the change then from UHY to Cone? Can you talk about that? I don't know, maybe not.
No, great question. So for the 3.5 years, we were one of the fastest growing lines of business within within UHY, we grew from myself to, over 100 folks, and
Wow.
became a very large organization. And we're at a good place. The practice is running very well. It's profitable and it's been growing. And, I just had the opportunity to meet with somebody at CohnReznick and kind of hearing their vision of where they want to go and how big they want to get, and kind of the support. And I felt really good about what I've done at UHY, and we have good leaders there, and we'll continue to take the torch and grow that organization. But the opportunity for me at Cone is going to be fantastic opportunity for really to take it and really build something very large. And I am very proud of what I did at UHY. I wish only the best, and I'm looking forward to my next adventure coming up very shortly.
Yeah. Is the client makeup or customer makeup similar across the two firms? Like, are you going after the same clients? Is it a similar service offering, similar price point? How does that kind of play
Yeah,
out?
so UHY is focused more on private, smaller organizations. So less from a top line revenue perspective, where Cone has larger firms that they support. So it'll be more of a pure play, looking from a BPO perspective for CohnReznick. Where at UHY, we're working with a lot of organizations that were less than 10 or $15 million in top line revenue, as an example, where Cone would be 25, 30, 50, 100 million or greater. So
Okay, very cool. Well, congratulations on that move. I hope it goes amazingly for you.
well, thank you, thank you.
And
I'm enjoying my week off being retired, though. That's
yes, you're 1 week of retirement. So, all right, let's get into it. Okay, so the premise, everyone, is we are in the accounting multiverse of madness. Kane wakes up one day and he is in an alternate universe, and he doesn't know anyone in this universe. He doesn't have a job. He doesn't have any clients. All he has is $5,000 in his pocket and his experience and, everything he knows and learns up to this point. And so what we want to try and figure out is what's the quickest way we could get to 30K MRR. So how do we build a practice? What steps do we take in which order? Who do we go after? What's our marketing look like? What's our tech stack look like? How does hiring look? Who do we hire? In what order do we hire? How much are we trying to pay them? Or are we offshoring? I don't know. So what we're trying to figure out is what's the best way to do this, because I think this is very applicable, because I think there's a lot of accountants who would love to do this or want to get better at building their own firm. And so, maybe they're able to take a couple tips away. So, and you just said you built that division from 0 to 100 people in basically 3 years. So you are the man to talk to us about this.
Yeah, this is great. And I wasn't expecting this question too. So it makes it more exciting. So.
Avalara helps businesses of all sizes get indirect tax compliance right. Their sales tax solutions help you manage sales and use tax complexities while lessening risk for your business and clients. Whether you're a small business or a global enterprise, Avalara can help you deliver tax compliance services confidently and efficiently. Over 30,000 organizations across the globe use Avalara's cloud-based compliance solutions to solve transaction tax compliance needs, including sales and use, VAT, and other direct and indirect taxes. So, all right, but let's just start with day one. You wake up, $5,000 in your pocket. What's the first thing you're doing?
So am I assuming that I have an office and I have a laptop?
Yes, we'll give you an office. We'll give you a laptop. You can work from home.
Well,
You don't necessarily.
Okay.
Yeah.
So if I had $5,000 and I had my laptop, I'm working in my garage. I'll be like Steve Jobs or
Yeah.
Gates or something like that. So I'm going to break it out between people, process, and technology. So
I love it.
So what I'm going to do is I'm going to start with technology, because if I don't have a technology platform, then it would be hard for me to deliver a service to a client. So the great news about technology today is it's cloud-based, it's a SaaS model, and you pay as you go. So I don't have to make a big CapEx investment to establish technology. So there are tools, and I'm not going to advocate for one or others, such as, Intuit or Xero or Sage Impact or NetSuite. You go down to Microsoft Dynamics. So I would establish a relationship with one of those partners technology partners, and let's just say Intuit for hypothetical speaking,
Mm-hmm.
and setting up QuickBooks Online. So I would work with them. I would not have to make any investment there. Make sure they have all the training and certification process ready to go, so that when I do identify my first client, that I can move forward. The second tool that I would identify would be an AP automation tool, because that's also when you look at the SMB market, there's a lot of challenges with accounts payable and dealing with paper. And there are tools that are out there that integrate with a Xero or a QBO or Sage Intacct, such as, Bill.com or Chipotle or Use. And this nice
Mm-hmm.
thing about those tools as well is you pay as you go. So I would sign up with one of those providers, let's just say Bill.com. So now I have a tech solution with QuickBooks Online and Bill.com from an AP automation tool. Now I'm assuming from a security for internal purposes that, my laptop and, I go to the Geek Squad at Best Buy and I get all my stuff set up. But, I have at least a foundation of what my tech stack would be as a starting point. So that's on the technology side. So on the process side, I would say, what am I good at? What industries am I familiar with? If I'm good at restaurant, or I'm good at a service business or a manufacturing business, or it could be anything. But
Mm-hmm.
let's start with a service business, because typically it's less complicated and you don't have to work on and leveraging inventory and some of the other complications. So
Mm-hmm.
let's start. I guess we can do a restaurant. I mean,
Okay.
we'll do a restaurant to start. And the nice thing about restaurants is the point of sale systems would integrate with QuickBooks Online or Xero or any of those tools, so that you would able to pull the sales information. So from a process perspective, we would look to kind of defining, the chart of accounts that we would want to use. What is standard operating procedures? How do you use the technology? What is the process from the standpoint of transactional level, accounts payable, accounts receivable, to doing the reconciliations, to creating the financial statements? You would kind of define that SOP, working with a restaurateur or somebody like that, and even more focused, maybe focus specifically on a franchise. So maybe we'll use, let's use Burger King as an example. So let's say I'm familiar with a quick serve. It has less transactions. It won't be as complicated as a full service. You don't have to deal with liquor. So we would start with a Burger King as an example. So that would be kind of a process focusing there. And then on the people side, since you don't have a lot of money
Mm-hmm.
for $5,000, there's a lot of accounting companies out there that help from a part-time perspective. So, initially, I probably would not make the investment of hiring somebody yet, but I would use a firm or a smaller firm that has some experience in that industry, and almost outsource that to them as a starting point. So you only need a couple people. So then now I have my technology platform, and assuming that from a people side, those individuals have knowledge of the tools that I identify, and then we also have the process side, the work papers and everything like that. So that's my foundation from a people, process, and technology. Now I have that, I have my relationship with my provider on the staffing side. And the next thing is marketing, is putting together a marketing plan and how to go about doing that. Now, in the franchise space, you can establish relationships with franchisors. So you build a business case and kind of meet with the franchisor. In this case, we use Burger King. Kind of talk to them and say, hey, I have some experience from working on other Burger Kings in the past. Let's just assume that the owner has that experience. I'd like to establish a relationship with you, and if you can help. I know that a lot of franchisees out there are out there struggling, trying to do the books and do the accounting. Can you help make some introductions to us, so that we can help support some of the franchisees, which will make your job much easier as well. So I
Mm-hmm.
would focus on those areas and developing those relationships, and then go to local Burger Kings as an example to start having those conversations and start from there. So that's from a dollars perspective, you're leveraging the relationships of the franchisor to help market for you would be a goal, or something like that as an
Mm-hmm.
expectation. And then from a pricing perspective, because the franchisor is going to say, well, what are you going to charge me? And the franchisee is going to say the same thing. We would put together 2 or 3 different packages. So there could be
Mm-hmm.
a package where it's just reconciliation financial statements only. There could be a package. There could be a silver, a bronze, silver, gold package as an example, where where the gold has full transactions. You're kind of handling all the back office accounting for a specific client, where the silver could be doing not as much. Maybe you're not doing the transactions, you're still doing the reconciliations and the financial statement. And then you have the bronze where you're only doing financial statements as an example. So those price points would be something that you would create for the franchisor to help market out to the franchisees. So when they have conversations, they already have a sense of what the cost would be as well. You would create kind of a standard contract and standard approach so you can replicate that and grow from there. So that would be my approach to take, especially if I'm starting with $5,000 to, and hopefully as the revenue comes in, you can start building upon that. The goal would be once you establish, you have some clients, and then you would look to bring in somebody. And it's always critical that, the first time you bring somebody in would be a potential leader of the future, somebody who's, strong accountant, has great people skills, also somebody who loves technology and wants to embrace it. So that would be my first hire as I kind of build my company from there.
So your first hire, if I understand correctly, are you looking to replace you with that first hire in terms of like doing the work?
That would be the goal. Yes, that would be the goal. And then you'd also have a support from that third party or third parties to help, depending on the type of work you have. Because when you think about it on a monthly basis, if you're doing the transactional, that's pretty consistent on a weekly basis. But for month end, when those 3 or 4 or 5 days, it gets more intense. So you want to make sure you have enough capacity to support the work that's required at the month end as well.
Yeah. Okay. So I want to take a step back and kind of dive a little into kind of the steps you walked us through. The first thing that struck me is a lot of these steps don't cost any money. Setting up QuickBooks Accountant, $0. Getting certified, $0. Bill.com, $0. Putting together, marketing materials, scope of work, $0. You don't have to hire that out. You can do that yourself. Thinking through those types of things, like you were saying, the, processes and whatnot of what you would go to your ideal client with, $0. But what is required is a lot of thought and research into, this is what I really pulled from it, is you kind of lasered in on this very specific industry. You're like quick serve franchise restaurants, but there was a lot of thought of, okay, these are the reasons why, because, A, B, C, D. So money's not required, as you're doing this, but thoughtful research is required, and really thinking through, not only in terms of what does the deliverable look like, how hard is it to do the deliverable, but also is like, how hard is it to get these clients? How many of these clients are there? So it just seems like there was a lot of thought as you were doing this into those things. And again, $0. The one thing that might cost money is when you said like contract. What would you do? Who would you go to have a contract written up? Would you go to see what the AICPA had as templates, or what would you do for that?
Yeah. So like for CPA.com, there are contracts and things. So you probably want to get a membership with CPA.com and be part of the AICPA, because as part of what I do on the advisory board for CPA.com for CAAS is, we're helping to define pricing models and templates and different things like that. So you can definitely leverage templates from that means. Now, knowing it's your own organization, you probably want to spend a little bit of dollars and get some legal advice and from a contract lawyer to review that. But the other nice thing about this industry is the collaboration of the different thought leaders and CAAS leaders across the firms, where maybe they're not going to share with you their contract, but they'll share other things potentially with you. And they've done that, and I've done that with others as I've been in this industry for the last 3.5 years. But yeah, there's places you can go to get templates. Even going to like Intuit or Xero or Sage or NetSuite, they have templates and other things that you can leverage as well. So and creating that engagement letter. So when you think about it, you'll have that engagement letter. And those engagement letters are typically 3 pages long. They're not 100 pages long, as an example. Okay. So when I started at UHY, we didn't have an engagement letter, so we created it. We had to create all that, and if you got to focus on it and do your homework, but with a little bit of legal advice, you should be pretty good with that.
Did you know that 52% of accounting practitioners, large and small, still rely on spreadsheets and manual processes for sales tax compliance? Why not move your accounting practice to the 21st century using Avalara for Accountants? The Avalara for Accountants automation platform helps accounting service providers of any size grow their service offerings with sales tax prep and filing, transfer pricing, research, business license management, and more. Scale your practice efficiently with award-winning automation that brings efficiency and accuracy to sales tax compliance. Want to learn more? Email accountants@avalara.com or visit avalara.com. Okay, so the next thing you talked about is partnering with some type of firm that does offshoring, correct?
It could be offshore, and it could be. I mean, there's local firms all over the country that provide accounting services. So there could be a small BPO company or a small CPA firm, as an example, that is either local or somewhere else. So there's a lot of firms out there that are looking to fill their capacity, and you can establish a friendly relationship with them. So, as an example, maybe somebody's on the West Coast and you're in the Midwest or on the East Coast, and they want to focus on X. And you want to focus on Y, so you can establish that relationship. Now, you want to be careful that, spending some money, that you have, non-competes, and you have specific, you're papered appropriately for that. Or you can find staffing agencies too. The reason why I would go from a smaller company, because, they have the training, they have the support, where from a staffing company, you have to come in and do that. And you want to have that support up front, because you're going to be pulled in so many directions if you're that owner. And you want to make sure that there's somebody working there with you, and you're leveraging their resources. And of course, you're paying them as your client's paying you. So you're able to hopefully build a profitable business. And then as you scale, then you can take on, a different approach if need be. So
with this relationship, would it be from the client's UX or perspective? Would it be like a white label? Like, would they just be working through you, and then, on the back end, behind the curtain, different things are happening? Like, what would it be like from the client's perspective?
So typically, if you can white label, that's great. But you could also, through the relationship, let them know. I mean, there are firms out there that use contractors. That's not a surprise. I mean, a lot of large organizations, especially as they grow quickly, you have to augment capacity with using third parties. So I think, from my experiences, if you bring the right people to the table when you have those relationships or kickoff calls with clients, then you find that the comfort is right there. So you have to make sure, from a interaction people side, that you have the people there to do the work, and they build that confidence. Whether that's implementing in technology too, where I've used contractors and consultants in the past, where we may be helping to leave and drive it, but we're using third party contractors to help, and we let our clients know that. And the clients are normally fine if the work is being done correctly. If it's not, then you have to address that appropriately as well.
Yeah. I mean, I'm like thinking back to my own engagement letter. I'm like, there's definitely a paragraph in there about, we'll probably utilize third parties and contractors and da 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 da. What did you do at UHY? Did you just hire internal staff, or did you utilize contractors at all as you were kind of getting the ball rolling?
So a couple of things. We identified some individuals within the tax group that had some capacity. So when we started to grow, we moved a couple in there to help us and to support us. I did end up hiring. I had more than $5,000, so I was able to hire. I hired a couple individuals up front. One extremely sharp and fantastic experience, and she was great and made a big impact. But we also did the implementation of the technology solutions for our clients too. So in that area, we had a combination of consultants and in our team as well. So kind of a mix and match, and kind of depending on the line of business and how fast we were growing. So I kind of used everything from that perspective.
At what kind of revenue point would you, because then you also talked about hiring someone to, replace you, that can kind of take over the day to day, make sure the machine's running. At what growth point does that person come in?
Well, I think that you want to have a slew of clients first. So you're establishing, that foundation. We'll go back to the Burger King discussion, where you have, let's say, 5 different clients, and they have different, 2 units or 3 units each, and you're able to almost fill, one of the individuals in the third party, right? So you're starting to bring in some decent revenue now. No, I guess I can I take out a loan? Or no, I can't take it out.
Yeah. You know what? Yes, there's no rules. Yes. No, yeah. How much of a loan would you take out? What would you do with it? This is a great question. This is good. This is great.
So I mean, if you look in the marketplace that you would want to bring in probably a senior accountant if you can, or somebody who's got a
Mhm.
good experience. And in the marketplace, you're gonna pay more than, $60,000 north.
Oh, yeah.
So even closer to six figures in today's market, depending on where you live and what part of the country. So, potentially taking on a loan, or I mean, it depends how fast you want to grow. I mean, learn that if you want to just have steady growth, and you just continue to be that person and you keep adding to that third party and grow from that perspective. And if you're able to make, the one thing is your margins are not going to be as high because, you're typically using a third party and they're marking up their markup, right? As an
Mhm.
example.
Mhm.
But, I think that you would probably want to get to at least, 10 clients or so, and you see that the model's working, and then you want to make that investment. But keep in mind, you want to invest now for the future, because that person you're bringing on may take a month or 2 months to get trained, to get certified, to get up and running. And then you would have to use that third party to help support and support that individual as well.
Mhm.
My role would be more focused, more external, from a building relationships and business development and strategic alliances, where the
Mm.
individual coming in would be much more of a chief operating officer kind of a mindset, where making sure that the lights stay on and the execution is being done properly.
Totally. Okay, that I had 2 more questions popped into my head as you were saying that. My first question would be from, okay, you talked about the role you would be doing and focused on. Where would you go? So you've narrowed down your niche, you're doing Burger King franchises. How do you find these clients? Where are you going? So you said you're going to Burger King itself. Where else can you meet these people?
Well, the great thing about franchises, they're part of the IFA, International
Mm.
Franchise Association, and there's local IFAs around the country you can go to. Plus, there's one, and I haven't been part of the franchise space for a while now, but there's the national conferences. Plus, there's restaurant conferences all over the country. So some of that $5,000, you have to be smart, but in today's world, you have to establish relationships with folks. So you go to the local IFAs, going to the national conferences is where you really establish that. You can't make an investment right now to buy a booth, right? Because you don't have enough money to do
Yeah.
that. But you can walk, you can meet, and also a lot of that information is public information too, on where
Mhm.
you can go and look at the number of franchisees, multi units, how big they are, where they're located. So that information is available. You can buy some of that information too, and then the goal would be to identify and do work with two or three of them, and then hopefully they're speaking good about the work that you're doing, and then you get 10, it goes from there. So you do need to do a lot of marketing on the conferences. And I think speaking engagements help as well, which are free. So having speaking engagements at IFA would be a great example to talk about how you can support, and what are some of the challenges with food and labor costs, and what kind of key performance indicators are restaurants looking for? How do you integrate from an automation perspective? How do you become effective, and impactful? So those are things that speaking and using LinkedIn and a lot of different tools, it can help you kind of, what I call, generate demand in the marketplace for your service.
Mhm. Yeah, and I'll even add to that. People, you want to think about where your ideal client is hanging out. And in this circumstance, they are hanging out at, industry conventions. And we want to always ask ourselves, where else do they hang out? What do they listen to? What do they read? And go put yourself in front of them in those situations. So it's like, is there an industry podcast that's popular? See if you can get on as a guest on that. Are there Facebook groups they hang out on? Probably. Go get in those Facebook groups. People will ask, like, it doesn't matter what industry you're in, people will always ask accounting and tax questions in those Facebook groups. Go in and start answering those questions. Go on, I mean, heaven forbid, Reddit. I don't know. Go on Reddit, see what people are asking in the franchise forum. So you want to be thinking again, like, where's my client going to be? And then go to that place. Like, I was thinking as you were talking about the conventions, and I've never done this. And honestly, a lot of the accountants I've talked with don't either, is I don't go to any industry conventions, and I know I should. I know I
Yeah.
should.
And I've done that over the years, and for me, it's been beneficial in many different ways, not only from
Yeah.
clients, but you
Mhm.
build relationships with other thought leaders, and you get to hear
Yes.
about things, and you become smarter. So I've always been a huge advocate of that. And earlier on more in my career, I did a lot more of that. I do a lot of speaking engagements right now, and it's beneficial because then it gives you a good pulse on what's happening. I mean, you learn like go to Burger King. I've been to their headquarters a long time ago. They had challenges and with this type of technology, and that their franchisees were struggling in these areas. So you get the talking points to then address those talking points with the client, with the franchisees. So, reaching out to a Burger King franchise or whatever and having these conversations with them, and wow, I do have that same challenge. And, wow, you have a potential solution for me. And if you can talk about, yeah, I already integrate with your point of sale system. I know what payroll providers you typically use. I know, kind of, how things work, and how about your vendors and all that. So the more information you can glean, and going back to your point, is it's the thought knowledge. It's the knowledge that you have. It's you're not spending money, but you're spending time, I should say, and taking the time to really learn as much as you can about the client, because the client wants to do business with somebody who knows about their business and that can take care of their business too. And the more you're able to build that rapport and that relationship, the better opportunity is for them to say, yeah, here you go. I trust you. And let's let it rip, as an example.
Yes. And that's actually, I remember years ago, I was studying some type of like copywriting course. But one of the things they said is search for the questions your ideal client is asking. How do I do this? How do I do this? What does this mean? And take those questions and put them in your copy. Because then they will be reading your copy and be like, oh my gosh, yes, exactly. That's me. And so that's also a great marketing technique. If you are having these conversations and people are telling you, these are the things that are hard, these are the things I'm struggling with, that's content for you to get more
Yeah,
clients.
I think listening. I think spending a lot of time listening to clients as you're kind of doing that initially is spending time, for it's free. I mean, it's your time. But meeting with franchises, or if you're in whatever business you want to do, is really get a sense of what are the challenges they do have. And there's a lot of technology challenges out there. A lot of these organizations haven't changed their tech stack for years. Now that's changed a lot with the pandemic. Kind of was kind of a booster shot, I like to call it, to kind of make that change management, to have to make those investments in cloud and all that, because I've seen a lot of that. We've done hundreds of implementations of technology, but I think that the more you learn about what they haven't done, what they can do, and see what those results are, and that's what's important. A lot of them they don't want to read a 30-page financial statement. They want to have the key performance indicators, and where they compare and what they're doing, and what do they need to do, or what insight they can get in order to make better decisions. So that's what, some of our clients didn't even want to look at financial statements. They just wanted this certain information. So I think you don't want to, kind of shove something down their throats. You want to listen to what they really want and provide that to them. And then you build that relationship from there as you move forward. So,
I love that. That's such a great point. We really need to meet our clients where they're at. And it means speaking on their level, using terms and phrases and wording that they use. And the more you talk to them, the more you're going to know what those are. And then pretty soon it just becomes second nature to speak with them, with that. Cause yeah, if I say balance sheet to one of my clients, they don't know what a balance sheet is. So,
and that's a great point, because when you think about CAAS 2.0 and where we want, it's not just throwing a bunch of financial statements over the fence and saying, here you go, good luck and God bless you. I think it's picking up that phone. It's meeting with the client if you can. It's having those conversations and getting deep. And I think that's an area where we all need to get better. Where I think sometimes you find that the industry's focus is really just kind of assembly line, getting everything out to clients, right? And
Yep.
and hoping that what you send to them is what they want. But I think one thing we need to figure out in leveraging tools for this is understanding really what they need and helping them determine where they want to go. And you get into FP&A and many different things and where CAAS wants to go. And I think that's an area where those are going to be the differentiations in the future of, today, a lot of clients are just struggling in getting financial statements. I mean, that's still the challenge today, but hopefully 3, years or 50 years from now, I don't know, but hopefully in the near future, they have that foundation. Now they're looking for more. And I think that's what CAAS 2.0 is. And that's where I want to go. And a lot of us want to go as an industry to take it to the next level and really provide that, that service to our clients, where then they can leverage, tax and other services within the firm. So I mean, we're really an extension of their team. We're working with them daily, weekly, monthly, and it should be our job to listen, to understand, to digest, to provide, and to help support as they move forward.
Yeah, man, I'll be the first to say, just getting the books where you need them in order to do all those other value add things, which the client actually wants. That's what the client actually wants. Is hard. It's very hard getting the books in good working order so you can do the forecasting, so you can actually do the tax strategies. Do you have a solution for that? How do we get good financials?
I mean, that's the biggest challenge I think that all of us have, and when I was at UHY too, is that most of what we received wasn't beautiful financial statements or clients that have in perfect sense. It was a mess, right? It was a big mess, and what we did is we created kind of a SWAT team to help with individuals that are able to go and they love to solve problems and love put things together and help to resolve that. But some of those are big lifts, so we had to go back sometimes 2 years of
Mm,
financials or 3 years.
yep.
My favorite one was when somebody had a pallet they rolled into our office that was filled with boxes, and that was my favorite one. And here you go. So I mean, not even that's all they have. So that's there's a lot of them like that, and but that's okay. I mean, we need to be prepared for that. If the only reason why they're coming to us is because they need our help and they need our support.
Exactly.
If their books and their books and records were in perfect shape, then why would they come to us? And
That's what I
well,
always tell new clients because they come. I find I work so my demographic I work with is mostly small S corp, so sub-million of revenue, owner. Some are just the owner, maybe a couple employees, but these are little guys, and they always come so ashamed of like I haven't done anything, and I'm so embarrassed. And I'm like, first off, don't be embarrassed. Like you're searching for help. Like step one, admitting you have a problem. And I go, also, every client who comes to me is a dumpster fire. Like, that's why I exist. So I was like, it's totally fine. This is why I have a job is because, then I usually, tell them a couple stories to help them feel better. Oh, this $12 million franchise I worked with didn't even have, had all these things they hadn't done and they'd been in existence for 30 years. So like everyone's a hot mess and it's okay. But, you're coming to me and I will help set you straight. But
yeah, but I mean, the thing is with the hot mess, though, you have to really set the expectation with the clients of what is expected too.
yes.
To take that hot mess and put it into a good place, because I think that what we've learned is that they think that they can drop that pallet with 30 boxes in your office and that
Hmm.
you'll have it be done in 8 hours. So I think that's but I mean I think those are the conversations that we have to have with our clients to set that proper expectation, because something like that could take a month, right? I think we all know that. So and there's a cost and investment associated with that. So I think that's where you have to sell the value and the proposition of, all right, we have a mess here. We're going to get you there. There's an investment you need to take. And then
Hmm.
that's phase one. Phase two, let's get you monthly financial statements that we'll review with you and then look at comparisons historically of trends and how your sales and your cost of goods sold and what your net income is. And then, phase three, let's start looking ahead in the future and figure out where you want to go. I mean, that's it. I'm simplifying it. I mean, it's not that
Yes.
simple, but I think that you need to tell them kind of what the big picture is, because we found before is that you come in and you do that investment, they pay and then they leave. And then they call you a year later and have the same problem. So you have to, you really have to set that expectation up front. So
Yeah. Honestly, so I'm partnered with a firm. How it works is I do all the sales. They're my clients. They come in, and then this other firm does all the work. So kind of like what you're saying, it's a revenue share. They take 60, I
Mhm.
take 40, top line. It's great. But that's been like number one, that's been a huge thing that I've been learned that I was not super great at, was setting those expectations up front. Like this is actually how much time this is going to take. If you don't do this, this is the natural result of you like not doing this. As pretty much how their internal timeline works is as soon as we get the last thing we requested for, it's at least a 3-week span, but it pushes it back on the client a lot, being like, if you're not getting our stuff, we're not doing this work. So that's one thing I've learned from partnering with this firm is they are very strict. Like I would half onboard people and then just dive into the work. That's what I would do. And this firm will not do that. They want every single last piece of information they're requesting. And until they get it, they are not touching any work. You're still on onboarding. And
No,
I think,
good.
yeah. And I think I was like, oh, wow, how many other firms have been doing what I've been doing?
Yeah, and I think what you're saying is that when you go back to your challenge for the $5,000 for me is that you have to make sure you pick the right clients too. So if you find if you're upfront and you're starting small, if you have the wrong clients, it could be very, very difficult to even recover from that. And where folks are not, as simple as give you read-only access to the bank accounts, right? Or same thing with credit cards or integration with their payroll and HRS platform. So if they're not willing to, and they're not responsive, and there's always times when they're going to be busy, but you want to be careful because you don't want to spend your whole time trying to chase them and you're not able to get the work done. So I think I've learned that the lesson the hard way too is where you just want to keep taking everybody in. You really want to assess and determine who the right fit is for you and what you want to do, because it's interesting. Sometimes your largest clients end up being the easiest ones, but your smallest clients take up most of the time.
That's true 100% of the time.
True.
All right. Well, so here's like kind of my last question around that largest for small clients and 30K MRR. What would be an ideal number of clients at that monthly recurring revenue, taking into account, volume versus is this one client make up too much of my revenue, and if I lose them, I can't pay my bills? What would be a good makeup?
So makeup from a large and small client perspective,
like in terms of like for 30K, would that be 15 clients good at that? 30 clients, 60 clients, 10 clients? Like what would be a good number?
So you want 30K a month is what you want right now. So you want to do $360,000 a year. When you look at a restaurant, let's do simple math. So let's just say full service restaurant, quick service, $600 a month. So
okay.
So you do that math. So you need quite a bit.
Ooh, that's 50 clients.
Yeah. But the thing is, if it's full service and beyond that, you can get up to $1,000, $1,200. So it depends on what it is. Some of the clients that I've had, we bill $30,000 a month.
Totally. What would ideal?
So it's really, go ahead.
Oh, I was gonna say, what would your ideal be? What would Kane's be?
I would love to find clients that are between $5,000 and $10,000 a month each. That's where I would want to be, just because they're big enough, they're substantial enough. You can provide good service for them. So keep in mind, a restaurant could have 10 units as an example, right? And 10 units at $600 is $6,000 a month. So if I think you're between $5,000 and $10,000 a month, then you can get up to your 30,000 quickly. Now the hard part is finding that initial clients that are going to do that, because some of the clients will be much smaller to start with. But that would be kind of my thoughts, is between $5,000 to $10,000 a month per client.
And with that, with that $5,000 to $10,000, are you just doing these kind of basic accounting functions, the bookkeeping, the AP, or are you doing any of that more advanced strategy and planning?
So initially, for my first 6 months or first year, I want to just build the foundation. So if I have the opportunity to do FP&A or some more CFO advisory, that's only gravy. It's only a bonus. But I would want to put clients into a good place where on a monthly there's a good cadence and they're paying their bills too, because that's the other challenge, is making sure that they pay timely and accurately too. Because if I only have $5,000, I don't have a lot of money to pay the payroll. So you set them off on ACH and have them prepay, and there's different ways of handling those situations. But I think that's one thing you have to take into consideration as well.
Oh, 100%. And like 2 takeaways I would tell people is, number 1, raise your rates always. And number 2, get paid upfront before you do work. Like, do not work in arrears. We do not have to do that in our industry.
Yeah, no, for sure. And I mean, if you can extract ACH from each of your clients the first of the month for that month, and you're in a much better situation. Help to eliminate your AR problem. But you're right, most people in the industry don't do that. They collect afterwards, and it's year end is always a fun time to try to collect a revenue.
Gosh, so. I can't remember if it might have been last tax season. I think I did a tweet about that, asking people if they collect tax money up front. Like, it was a poll I did. Like, do you collect money up front? Do you require a deposit up front? Or do you collect all at the end? And I was shocked at how many people said they bill at completion. And I was like, and what they said, their reasoning for it was, well, my clients pay. Like I've never been stiffed. But I'm like, from a cash flow perspective, like you could get that cash up front. Like you are like providing float for their business. And you're just working for free essentially until stuff is complete. And then also it's tax time. People drag their feet. They're not in a rush. So it's like the slower they are getting stuff to you, the more you are having to pay for these services out of your own pocket before you're getting paid after the fact. Like it was just so surprising to me that all these accountants were billing after the fact just because I've never had issue collecting, but not thinking of like the cash flow perspective.
Well, I think most public accounting firms have challenges with that. So I think that in the BPO space, business process outsourcing space, I think a lot of those providers do that or try to do that. But I mean, I think that that's an area that we really need to push hard on because it's everybody thinks they're going to pay, even if it's your best client, but then you find out something happens and then sorry, I can't pay you this month, but I'll pay you next month. Oh, sorry, I can't pay you this month. And then they come back and say, well, I'm not really happy with your services. Now they leave you. And it wasn't because your services weren't good. It's because they didn't want to pay. So that happened.
Yeah. Or do you know who Brandon Hall is? He's it's the real estate CPA. He's building a virtual firm out of Chicago. He did this. I was like, just keep referencing Twitter. He did this tweet thread about this nightmare scenario where it was like months and months and months of work, thousands and thousands and thousands of dollars that they did for this client. And they did the work. And then the client disputed all the charges. And I think it was American Express. And even though they had contracts and everything to show, like we did the work, here was the deliverables, to the credit card company, they weren't able to get any of it back.
Yeah, no, that's a common thing. It's in my career, it's happened, many times, and it gets to very uncomfortable conversations too. And nobody wants to go down that path. But I think that, the better you can set something up, even if it's a net 30 or net, 45, you still find cases, well, let me pay you net 60 or net 90. And then you run into that situation, like you just explained at American Express, and they decide, well, sorry, we can't pay you right now.
Yeah. Is ACH how you avoid that? Like you can't go back after the fact, right? And get ACH back? I should know this answer, but I don't.
No, I mean, ACH you would set up where you're drawing information from their bank account, which you have, there's a form you fill out for, prepayment, or you could do it after if you want. But, a lot of clients would say, well, they don't do that. And some of them still send in checks, but then you always get the response with the checks in the mail. And then the next week's check's still in the mail and the dog ate the check. I don't know. So.
Yes. Well, one thing I noticed too, like, sorry, I just keep thinking of ideas, is people will keep doing work even though they haven't been paid. That's another thing I've noticed in our industry. Instead of stopping work and saying, I will not do another thing until you remit payment, they will let it drag on for a couple months.
Yeah, that's true. Yeah, that's a problem.
So as you're building your firm, don't do that, people.
Well, I think you can't afford to do that initially, but yeah, in the larger firms still too, I talk to others, and that's a challenge that somebody hasn't paid for 6 months and folks are still doing it, and the client calls up and asks for a request and we jump and do it. That still happens, and it just that's something that we have to reevaluate for sure. So
yes. Okay. This was a really fun conversation. I could keep going forever, but I want to like wrap up kind of the highlights of what we talked about. The first being to actually get started in terms of figuring out your ideal client, market research, marketing materials, getting set up on QBO, developing your products and services, SOPs, et cetera, et cetera. None of that costs any money.
Correct.
And, forming those relationships, you want to get, number one, good contracts in place. So, if there are disputes, so maybe invest some money in that. And then as you're building the business, I like to always work backwards because I do forecasting for clients. It's always, where do I want it to get to? And then how do I build that starting from day one? So figuring out, okay, I'm going to get up to 30K MRR. How many clients is that? What's the average price point? And reverse engineer it. And also too, like, especially in terms of payment, like make sure you're getting paid. Don't be like most people in our industry. Get money up front. If you're not getting paid, stop work and only work with good clients. Like have a wealth mindset. All of us have more clients than we know what to do with. You can be picky and you can drop the people who are not good.
Yeah, you fire. I mean, I've had to fire bad clients. I mean, it's not, nobody wants to do it, but it's something that we all need to do. And especially if, especially I've had situations where they're not treating our employees correctly. There's all kinds of
Yes.
things that happen
Yes.
out there. And instead of taking it, sometimes you have to make that decision. So it's,
Oh my gosh. I think early on in my career, I was very afraid of that. I was always afraid of losing a client. And now, I mean, I've been in the industry for 10 years. Just this fall, I fired 3 people during onboard because
yeah.
they couldn't follow the processes. And I'm like, you know what? This isn't going to work. If you can't upload a box, if you can't add us as a third party user to your bank, if you can't click my Zoom link to set up a meeting, this relation, like that's not how we work. This is not going to be a good relationship. Let's just go our separate ways, call it good.
Yeah, no, and I think we need to do that more often and not wait so long
Yes.
too. I think there's cases where we've waited. Well, I've waited too long too. So I mean, I think that it impacts the morale. I mean, one thing that as you build your business and you have your employees and they're your own is you want to build a great culture and a place that they enjoy working in, and you want to protect your client. You want to protect your employees, as an example. So the last thing you want to do is you bring in clients and maybe the revenue's high, but then you find out they're treating your employees incorrectly or badly, and sending emails that are unprofessional. And I think your staff remembers that kind of stuff and sees that,
Yeah.
and the investment in the training and the certification. But it's a big aspect, I think, especially today with hard to find really good employees. You really want to make sure
Yes.
you take the right approach and you show them that you care and you want them to grow and move up and take on more responsibility and do things that they love. And but you have to protect your employees too.
Yes. It's easier to find more clients than employees, especially in today's labor market.
True. That's true. Yeah, there's no issue. I mean, we had to just to talk about that, we had to stop our sales process for 6 months because we were growing so
Wow.
fast. I mean, it was that crazy. I mean, we'd get on the phone with individuals who would call us, and it would be a client or a prospect, and we would on the call in 5 minutes. They said they needed help, and this was during the pandemic, but it was so
Yeah.
crazy, and there was so much of a demand, and it's not as crazy as it is today, as it was back then. But you really want to make sure you don't grow too fast either. So you want to grow in the right way and in the smart way, and you're going to learn. It's never going to be perfect, but it's
Mhm.
very easy to take on and just open up having that big net of catching all that fish and bringing it in at once. And sometimes that could be overwhelming too, and you don't want to work your team to death either. So
Yeah, exactly. And that comes back to 2, like, number 1, understanding your team's capacity, and then 2, having really good systems and processes in place for getting, onboarding new clients and, pushing them into the machine and getting them set up. So onboarding's always, I found, such a bottleneck.
that's probably the most challenge. It's probably one of the most challenging pieces. It is onboarding. You want to have some of your best staff there, and you have to be able to communicate. And there's a lot of project management that's required to do
Yes.
the work successfully.
Yes, yeah, and even to the psychology of working, like, I've read a lot of books on, like, sales and whatnot. There's one of the best ways to, like, make new customers very happy is to make them feel like things are being accomplished immediately. So
Yeah.
setting up your onboarding process to make them feel like that, because then they will be more excited and more engaged that stuff is happening.
Yeah, no, for sure, for sure. Yeah, and celebrate the wins and celebrate, but also set the expectation of the client. There will be challenges. It's not going to be easy, but over
Mhm.
communicate. Do a weekly status report, touch base. Have those conversations, and I think
Oh, I love that.
using Zoom and all the different technology, walk through that process on screen with your client too, or in person if you can. And I think just sending emails, people get so used to just sending emails out, and you get hundreds of emails a day,
Oh,
but having
right?
those conversations, building that rapport, I find sometimes even sending somebody out to the client, you can save so much time than to have somebody emailing 30, 40 times back and forth with a client, as an example.
Yep, exactly. Oh, Kane, it was so good having you on. If people want to find you and connect with you, where is the best way to do that?
You can just connect with me on LinkedIn. So you can look me up, Kane Polakoff. You just there's not many Kane's Polakoffs out there, so I'm sure you'll find me. So it's Kane, Polakoff. But you'd love to have conversations, and I always like to learn and love to share my experiences as well.
Awesome. Well, thank you so much again. This was a really fun conversation. Like I said, I've been looking forward to this conversation for almost a year. So
for doing it again another time.
Yes. Awesome. And thank you, all my listeners. I will see you next time.